Joining me is Deepak Abbott, who's the co-founder of Indiagold. Deepak, always a pleasure speaking to you on NDTV Profit. First of all, looks like SEBI is clearly saying that all that glitters is not gold. How are you in particular impacted? You're an industry player.
Thanks, Isha. Thanks for having me on the call. While Indiagold is specifically not impacted because we are in a gold monetization platform, which is different from selling digital gold. While we do sell digital gold, it's just a feature on our app. So there's no direct impact on us. Having said that, I think we do understand that people who are actively investing in digital gold, they may feel a little threatened by the SEBI guidelines, or not the guidelines, the notice that came. So yes, it might have some dent on some of the investors. I actually wouldn't call them investors. Some of the people who actually use digital gold as part of savings. So yeah, let's talk about that.
Right. So minimal impact on you, Deepak, because it's a very small portion of your overall portfolio. But when we talk about digital gold, that's very differentiated from a gold ETF, which comes under the purview of SEBI. Now, is there a problem with who regulates the digital gold aspect?
I think the confusion arises from what exactly is digital gold. I think what SEBI is trying to say is that it's not an investment instrument. They do not govern it. So if there is any fallback of any platform that happens that is the custodian of your gold, they are not responsible. But we have to understand that digital gold is actually not an investment product. So SEBI is right in a way, because digital gold, in my view, is a savings product. It's a micro savings product. It's not typically like gold ETF, where it is traded on the exchange and SEBI has an oversight. It's run by private platforms, so it's a contract between buyer and a seller that the seller will honor its promise of delivering physical gold when it is required. Now, being a saving, when I say it's a savings product, it's meant to do micro savings for the consumer. So you can buy a digital gold for as low as ₹1, and it doesn't come with those hassles of opening a demat account, doing a KYC. Now that's where the problem also lies, right? Since you're doing it on free market public or private platforms, there's no regulation around it. Now, who protects you in case a platform goes down or in case your money gets stuck? So I think that's the reason why SEBI wanted to clarify that they are not the ones who are going to protect you. Maybe some other regulator or RBI could be looking into it, but as of today, it's an unregulated product.
Right. So Deepak very well pointed out, one critical aspect over here is that we do not see digital gold as an investment vehicle or an asset class. It is more of a savings product, especially with smaller ticket sizes for microfinance savers and investors. Now, looking at this particular aspect, has this question come about with the regulator, Reserve Bank of India, about regulating it, since so many small investors need to be protected on this, and SEBI has clearly stated that it entails significant risk?
So I'm not aware of any discussions at RBI or regulators and to regulate it. But in previous discussions and interactions, I think RBI was very clear that they do not regulate it. Do they intend to? I think at that point in time, like I said, they had this confusion that if this is an investment product, SEBI should be regulating it ideally. But now SEBI saying, since they do not regulate it, I think the ball is in RBI's court, that if SEBI has taken their hands off this product, what do we do about it? Because at the end of the day, there are consumers who are depositing money on certain apps and platforms, and they could be at risk. I'm not saying digital gold is risky. It's just that we've seen that if there are 10 good players in a segment, just one bad actor could actually spoil it for others. So that's where I think RBI needs to see that how big is the market as of today, or what's the deposit that each platform is holding, and is it actually at risk or not. So I think there is a requirement for some sort of a regulation, because consumers are trusting private parties, and it's based on certain promise. And there is no protection in case there's a bank run, or consumers want to really sell their digital gold and get their money back. And platform can have their own terms and conditions, and they can change it overnight because they are not governed by any written guidelines around it.
Right. So finally, Deepak, who gets impacted with this cautionary stance by SEBI? in the absence of a regulation by RBI? And what is the purpose clearly that it was solving for, which could get impacted?
So I think the product digital gold is a very appropriate product for India. The reason I say this is because while we have people who open the demat account who understand how stock market works, even if they don't understand, at least there's enough education around it. You know how to invest in mutual funds. There is SIP, and there's a whole system around it. But there are a lot of people who don't really understand this side of the market. Plus, they do not have the funds to actually get actively into mutual funds or stock trading. So they need some sort of an instrument or a product where they can park their money on a weekly, daily, monthly basis through an SIP or a UPI auto pay. Now, this fits in nicely with first jobbers, people who are unskilled, self-employed, people who have very less savings at the end of the month. They want to park it in an instrument which promises them some returns. Like with gold, appreciating about 50% last 1 year, it has obviously interested a lot of people who are trying to see if they can benefit from this surge in gold. So these are people who are still not into the financial ecosystem, or who are still not comfortable with opening demat or doing their full KYC, or they do not really get into too much hassles and want to keep it simpler, or they get lured by the word of mouth or friends saying this is the easiest way to invest. And these are the people who might get impacted. But having said that, like I said, it's still a product which has its place in the market. That's the reason I'm saying if it is regulated, I see a potential for digital gold to be a lot bigger than what it is today. It will bring in a lot of new users. It will bring in a lot of people who start their journey of investment/savings with this product, and then maybe move on to a more formal product like gold ETFs or mutual funds or stock markets.
That's right. It's a low ticket size, and also the non-requirement of safety and custody of physical gold. That makes it very attractive, especially for the smaller investors. But of course, we need to see how it's regulated for the protection of these very small investors. Thank you so much, Deepak, for explaining the matter and giving us your insights.